Queensland Government's investment bid on failing airline Virgin Australia has sparked increased criticism. Last week, the Home Affairs Minister, Peter Dutton, labelling the move as laughable and a political stunt. Caught in the headwinds of an economic storm caused by coronavirus travel bans, the airline went into voluntary administration last month, owing a total of $6.8 billion in debt. Eager to save the airline's 5,000-strong local workforce, keep its headquarters in Brisbane and maintain flight routes to the state's far-flung regional centres, the Queensland Government has thrown its hat in the ring to help save the airline from total collapse. It's directed the Queensland Investment Corporation to work with the airline's administrators and other possible bidders to determine whether a $200 million financial stake would be a prudent investment. For more, we're joined by investigative financial journalist Michael West. Michael, welcome back to the program.
Good to be on the show, Tracy.
How real do you think this idea from the Queensland Government is?
Well, it must be real enough for them to announce something, but the details are very sketchy. They haven't said what they want to get with that $200 million. Clearly what they want is to protect Virgin's regional routes in Queensland. I mean, you know, there's some value in Virgin in that Sydney, Melbourne and Sydney, Brisbane, etc. These are highly profitable flying routes, among the most profitable routes in the world. So there's some value there. But what will likely happen if this emerges, if Virgin Australia emerges from administration, is that whoever the new owners are will start getting rid of regional unprofitable routes. So that's what the Queensland Government is concerned about.
So by having some sort of a finger in the pie, they could actually get involved with other groups that have expressed interest and maybe maintain those crucial routes for them?
That's right. I mean, you know, if they're putting some cash in, I'm not sure whether they're part of another consortium or at this stage, Friday was the deadline for bids. There's a dozen bidders or so. They're all non-binding indicative offers, which doesn't really mean a lot because, you know, the buyers have got time on their side. There'd be 200 airlines around the world up for sale. Not one airline in the world would be profitable at the moment. So the buyers aren't going to be throwing cash at this without making extremely low-ball offers for these things.
Yeah, and how difficult is it going to be to keep Virgin as it is here in Australia, given what you said, there are airlines all over the world that are now for sale?
That's right, and so all these buyers, they'll be looking at a whole lot of things for them, not just airlines. A lot of these guys are private equity, sort of capital vulture type of outfits that look for really cheap situations, turnaround situations, rip the costs out and hopefully make some money and on-sell it down the track. So at this point in the process, it's still very unclear whether Virgin, in fact, will emerge from administration or whether it will go into liquidation like Ansett did. So this is the risk with this project, with the government not coming to the rescue, because it may leave Australia with just one dominant airline, Qantas, in which case, you know, they'd run riot on the pricing front. That wouldn't be in the interest of anybody except Qantas shareholders. So two airlines, most sensible commentators say they want to see two main airlines. So how do you do it? Well, they're doing it the private way and they're waiting for bids to come in. But at this point, you know, the bids aren't going to be very, very big. And there's $6.8 billion worth of debtors in there, so they're going to have to take a haircut.
Is Virgin's collapse solely a product of COVID-19, or was this already in the cards? And like we've seen across a whole range of other spheres, COVID-19 has been the blanket upon which they could ride.
That's right. Well, incidentally, they've already got plenty of money out of government with Michael McCormack's regional, subsidy. But, it was a dodgy financial proposition for shareholders from the start. Four main other foreign airlines got 80% of it. Branson's got about 10%. And the Australian stock market has a float of about the remaining 10%. And the investors have done very badly out of it. It's been a poor performer, never pays any tax, got billions of dollars in tax losses. It was too ambitious in going to the premium end of the market to take on Qantas, rather than just sticking to what it used to be. Remember, Virgin Blue, just a discount carrier. I mean, you could have a second player in the market that would make money if they just stuck to Sydney, Melbourne, Brisbane.
Do you think the government should be stepping in or just leaving it to the market as the best approach? I mean, what is in it for Queensland taxpayers?
Well, it's always been my firm view, and I've written a couple of pieces on this, that the government should invoke the Constitution, Section 51, and just buy the thing, buy all the assets. That's the people and the plane. You can leave the company, just leave the company alone. That's got $6.8 billion worth of debt in it. Pay a fair price for the assets, which you can under the Constitution, and just buy the thing, put the planes out in the desert, and wait for the markets to turn around, and then maybe sell it, float it down the track when things are better. That would be the cleanest, simplest solution to all of this, rather than risking another Ansett, which was an absolute disaster, whose administration turned liquidation and dragged on for almost 2 decades. Mm. So, that would have been the most elegant thing. Loan guarantees and partial equity stakes and these kind of all these things are a little bit messy because, of course, then the government's stuck in there as a sort of a shareholder with other players and other creditors all wanting their money back, and it's a much more complicated thing. That's why I think it's just a real toss of a coin as to whether this thing will ever emerge from administration, from the warm embrace of its insolvency practitioners, because there's too much in the way of fees for these guys just to keep this thing going forever. And bidders, well, I mean, what's it worth? Bidders aren't going to be wanting to pay more than a few $100 million, because when it went into suspension, it was valued by the share market at only $730 million. So you wouldn't want to be paying much more than that. To get hold of this thing. So I think forced acquisition is the way to go, but clearly the government doesn't want to go there. And so we've got this very messy, very uncertain thing with, as you said in the preamble, 5,000 families relying on this for their future, and then the knock-on effect from there. So it's very, very messy at this point. And if the Queensland government's 200, that's not going to do much. There'll be people that'll pay more than that. So it could be part of another consortium, but as yet, Tracy, we don't know what the actual nature of their bid is.
All right, appreciate your time today. Thank you, Michael.
Good to chat. Thanks, Tracy.